Let's find out from Peter Mcguire, the CEO of Trading.com for Australia, and joining in now straight from Sydney. Always a pleasure chatting with you, Peter. So, of course, we knew that the volatility in the war situation will continue and that will reflect on crude oil prices. How are you seeing the overall momentum currently?
Well, good afternoon, Nisha. A couple of things. First off, as you know, it's up 10% for the week, and it's been a very, very volatile situation.
Yes.
Where is Iran going to sit itself? What's happening as far as strikes from the US, retaliatory actions, the Iran saying that they want to have an impact across the Red Sea, and of course, Bab el-Mandab through the Houthis. So this is a very dynamic situation. It's live. It's very uncertain. And I don't think it's been put to bed yet, Nisha, in any fashion or form.
That's right, Peter. In fact, the war situation is such, it's very easy to start the war, but very difficult to come to an end with a peaceful negotiation. So that's something that all the experts have been stating. Looking at the current situation, what are your channel checks suggesting when we talk about the supply constraints from the Strait of Hormuz when it comes to oil as well as even the gas tankers? Because that has a direct correlation to the Indian economy.
Absolutely. And it's all about supply. And if you crimp supply, as we know, Nisha, that's going to be a great impact as far as GDP growth, what happens across India and Asia. And if you have, bottlenecks or you have other concerns, if that was to ratchet up from here, this is not a good sign from an inflationary standpoint. More hurt on Main Street as far as, the consumption patterns and, man and woman on the street buying fuel. All of those concerns are greatly impacting from a discretionary dollar spend and the GDP picture. So I would have thought it'd be over by now, but it's certainly gone the other way. And it's going to be, again, interesting how this plays out over the next couple of days from Iran's positioning and whether the US turns the heat up.
That's right. And also from the in-house view, Peter, coming in on the levels that you're seeing for crude oil prices, Brent crude is slightly on a negative tick today, below $85 per barrel is definitely good news given the current circumstances. But how do you see the dollar prices really settling in the current phase of uncertainty?
Well, the uncertainty is the key word, Nisha, and that is really the dynamic nature of the markets. Markets don't want bad news. They live on sentiment. They live on geopolitical concerns, and all of these factors are positioning themselves that if it was to escalate from here, then I'm sure that 85 to 90 is very achievable. Let's hope that it doesn't go to that point. But this is always the wild card. This is not a short-term situation. Everyone thought that the whole matter had been put to bed pretty much at the start of the month, and here we are on the 17th of July, and it seems to be heading in an uglier phase, not a better phase.
Right. So, Peter, you said $85 to $90 per barrel. Do you see a situation where the flare-up in the war situation can also lead to crude oil prices at the highest levels that we had seen in the last couple of months, above $120 per barrel as well? And what are the factors at play if they tip off, really, that crude can touch those levels above 100 again?
Well, it'd be massive retaliatory action from Iran, and it'd be an impact as far as Carg Island from the US, and it'd be probably creating much concern as far as supply through the Red Sea and Bab el-Mandab through the Houthis, and it becomes a very protracted and and intensifies. That's the issue. If it was to intensify, yeah, you can hit those numbers again. And that's the issue that we have at the moment, whether this is going to be a really short-term phase and it's all sorted by the end of the month, or we're here at this time next month and they've turned the heat up dramatically. That's the unknown.
That's right. And Peter, when we talk about the other precious metals, and they also had a fair bit of volatility because of the war situation. When we talk about gold, it continues to extend its losses. What are the levels that you're really looking at and factors at play?
Well, it's been, as we know, sold off. It was at 39.50, 39.80. It's back at 4,000 now. It's about $4,002 I've got on the screen. And you've got silver well down as well at under $56. So it seems to be, a downward draft. I'm thinking 38.50 to 3900 as a floor. Let's see, silver. Well, it's testing these support levels. Maybe you're going to see, the best part of a $53, $52 handle. And it's just a work in progress to see how long, the crude oil market, I think, is taking all of the energy and all of the heat out of it. So that's where the focus is. That's where traders are, I think, getting the best opportunity at the moment, Nisha.
And Peter, when we talk about the other metal prices, now they have had a rollicking time during the war situation. And some of the, metal companies have really made their best profits, at least for this quarter. We are going to see that. How are you assessing the metal price movement and also the war impact as well as the upside that is seen? So the levels that you're really looking at when we talk about the other metals, ferrous and non-ferrous.
Yeah, sure. Well, if I look at aluminium, it's been big sell-off from that 3,500 handle down to what's at 3,185 at the moment on the LME, and you've had copper as well. So that's been sold off very, very aggressively, and maybe 3,000's the new handle. It's much. Just all the heat's come out of the aluminium market. Zinc's still holding at a pretty good price, and so is tin. And copper is sitting at the best part of 13,600 on the LME. So I'm still suggesting that their best time is going to be in the fourth quarter. We've just got to get through this third quarter issue, and let's see where it goes as far as global demand picture. We all understand from technology and data centers, AI build out, all of that, and the demand for the industrial metals is still strong.
Right, Peter Mcguire, always a pleasure chatting with you and taking your expert take on all the commodities. Thank you so much for taking time and stopping by. Thank you.
Thank you.